Hi there traders, this is Steve Miley, the market chartist for FX Explained and our regular weekly MacroWatch update for the week commencing the 8th of November 2021. Dovish Fed and strong US jobs report sends stocks even higher. Let's take a look first of all at those macroeconomic and geopolitical developments from the past week. Well, first of all, the Fed signalled a start to bond purchase tapering on Wednesday, but struck a more dovish tone than market expectations regarding the future interest rate rises. The Bank of England did not raise interest rates as the market had been expecting a rate hike on Thursday, and this has reinforced the global central bank dovish tone that we've seen from the Fed this week and the Bank of England, and previous to that from the ECB. The US October jobs report on Friday shows 531,000 jobs added, beating consensus estimates and aiding the risk-on theme that we've seen through late October, carrying on now into November. Congress passed Biden's $1.2 trillion social infrastructure bill over the weekend, which should further bolster the risk-on view into this week. So let's take a look at the actual global financial market developments for last week ending the 5th of November 2021. Well, equities surged still even higher beginning November, continuing the strong rally that we saw throughout October, hitting yet another new record high for the S&P, also seen on the Dow Jones Industrial Average and on the Nasdaq through last week and into Friday. And not only in the US, but another new record high posted by the DAX through last week as we've entered November, a still more bullish tone for European equity indices. Yields have plunged lower in here across the globe. We've seen European, UK yields significantly lower with that more dovish tone from the Fed and from other central banks. And we've seen the US dollar actually rally despite the more dovish tone from the Fed in here. The US dollar more positive, pushing up to highs seen earlier this year. And on the back of that US dollar strength, we've seen a more vulnerable euro, EUR USD, making a new multi-month low. And also the pound pushing lower, getting back to lows that we've seen earlier this year, back down towards that 134 area, and the pound versus the dollar looking vulnerable too. Gold actually pushing higher despite the risk-on theme, despite the fact that the dollar is strong, gold pushing higher within a broader range environment. And oil actually signalling a top in here, pushing lower last week despite OPEC keeping their production levels as expected in here. We've seen a more negative theme for oil, putting in a potential topping pattern. And we saw copper nudge slightly lower, having sold off through the second half of October with a more negative theme within a broader, wider range environment. So let's take a look at the week ahead commencing the 8th of November. Well, we've got daylight savings time has ended in the US over the weekend. Clocks went forward in here. And also to note in here, Thursday 11th of November this week is the US Veterans Day holiday. US bond markets are closed, but the stock markets are open and obviously foreign exchange markets open. On the central bank side, a very, very, very quiet week for central banks with no significant activity, no meetings from the major central banks of note. And on the data side, fairly quiet as well. Monday sees nothing of note, and the same on Friday. On Tuesday, we get the German ZEW survey and US PPI. Probably the standout data of the week, we get Chinese, German, and US CPI all on Wednesday alongside Chinese PPI. There's the Australian employment report on Thursday and that Veterans Day holiday also Thursday. Plus we get UK industrial and manufacturing production and GDP on Thursday. And as I said, nothing really of note on Friday. So a fairly light data calendar. I'm going to wish you all, as ever, a great trading week. Please do stay safe out there. And as ever, please do hit that like button if you like what you're seeing. And also follow us on our YouTube channel. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.